If yield is all that mattered, everyone would already be rich. So today we're testing JEPQ, the only way that matters, with data. JEPQ looks like the perfect income ETF. High yield, monthly cash flow, exposure to the NASDAQ. But here's the question no one really answers. What happens when you stop looking at the yield and start looking at the math? Today I'm not giving opinions, I'm not selling hype. We're going to backtest JEPQ, distributions, price action, and total return to see what an all-in investor actually ends up with over time. Because income feels good, but numbers don't lie. So stay tuned. Welcome back to Simply Money. Today we're looking at JEPQ. We've looked at a lot of different funds, backtesting them, doing an all-in scenario. For those that are new to the channel, thank you for joining us. If you haven't hit that like and subscribe button, it means a lot. It helps the channel out. If you find this video informative and helpful, please go ahead and smash that subscribe button. So here we are today looking at JEPQ. What we do in these scenarios is I take a hypothetical, my whole income portfolio. What if I was to put it all in on a single fund? And today we're looking at JEPQ and what that would look like. JEPQ's been around since June of 2022. And so we're going to be looking starting then what it would have done if we had put in the entire amount back then. We'll look at the price appreciation. We'll look at the distributions, and we'll do some different drip scenarios for those who are new. We do 100% drip, 50% drip, and no drip. And then we do a variable drip where we can set the price. If you like these worksheets, you can grab this JEPQ one on the Buy Me a Coffee link down below. I appreciate all those who have purchased sheets and support the channel that way. Your support is greatly appreciated. Here we are looking at JEPQ. We're going to start right here, June 1st, 2022. Share price $48.48. This is a monthly paying ETF, and we were able to get 10,829 shares with our hypothetical $525,000 portfolio. What we'll do first is we'll just go down column A, B here. We'll look at the dates and the share price. You can see how it had a little bit of dip here early on, 2022. If you remember, the market overall was down. So you can see that decline in JEPQ. Now, with a lot of these covered call ETFs, what we want to look at is how does it recover after it's had a downturn, a pullback. All funds have that, whether it's the S&P 500, a single stock, it doesn't matter. Every fund, every stock is going to have pullbacks, it's going to have downturns. It's going to happen. With covered call ETFs, one of the principal things you want to look at is how does it recover after that. And with JEPQ, we can see that it had a nice recovery. It got back up to its original price. And then it started going above that as 2023, 2024, and 2025 were very good years in the stock market overall. We had some good returns in the low 20% return, and then I think it was around 17% return for the S&P 500. So we've had 3 solid years of stock market growth here, and JEPQ has followed that rather nicely. You can see in early 2025, had a little bit of pullback during the Liberation Day tariff, and then it has begun to climb since. And so we're ending at 58.17 as of December 1st, 2025, and that puts us at right at a 20% increase over that 3.5-year time frame. So that's for a covered call ETF that pays a high distribution. That's a really nice share price growth. So again, this is a fairly short time frame, better than some of the ones we've looked at. We've had some that we only have a year, even 6 months of data to look at. 3.5 years is giving us a little bit more overview of it, but we've been in overall a strong market. Again, 2022, it started out a little bit low, but it regained that. You could look at that as, let's pretend you retired in mid-2022, and the sequence of returns, how would that hit you that first year of retirement, and how would you have fared? Some things we can look at with this fund that will give us some feelings of what it would have been like. Now I'm going to stop here and clarify, this is not financial advice. I'm not a financial advisor. This is for information and educational purposes only. You need to do your own due diligence, make your own determinations on what you invest in. And I do these scenarios these what ifs, not as advice. I do not recommend going all in on JEPQ or any fund. We'll make that very clear. Always do, always will. This is not recommending going all in on this fund. Now let's bump over here to column C. We'll see the distribution started at around 37 cents and got up into the 50 cents and then jumped up to 68 cents, but it came back down as it was going through the recovery of the share price decrease. But it is pretty much set in that high mid 30s cents to the low 40 cents range. It peaked up in here. We got up to 55 cents in October of 24. And you can see it slowly going up as in 2024, 2025. Now we're looking at the mid 40 cents up into the 50 cent range. So it's having slight increases overall. If you look from the beginning to the end, it has averaged 46 cents per month, and it's increasing over time slowly. It goes up a little, comes down a little, but goes up a little bit more, comes down a little bit more, because the yield is remaining about the same. And as the share price goes up, that yield remains about the same. So the distribution slowly goes up with that, keeping that roughly 10% yield that it's trying to pay. With that being said, you can look here in column D, we're seeing the distributions. This is with a full drip. So with this, we're getting the distribution, we're buying more shares, and then we continue to grow that distribution because not only is the share price going up, the distribution per share is going up, and then you're gaining more shares, so we're going to see that going up exponentially. H1, we had the 10,829 shares that we bought originally. Got our first distribution of $4,000. We're able to buy more shares, so now we're up to 10,913 shares. And we'll continue to see, as we come down column D, you're getting 4,000, 3,700, 4,400, 6,000. Now we're up here in November of 2022 of $7,700. And it came back down, and it's been through 2023. It was in the 5,000 range, a couple that peaked a little higher, some a little bit lower. We come into 2024, you can see that now that's in the high fives and even hit 7,700 here. And then when we get up into 2025, we're looking at 6,000 is about the low, and we got up here to $9,000 per month. Again, you're seeing how that is increasing as the distribution is going up a little bit, and you're gaining shares, because now when you look down, all of these distributions you've just bought for 3.5 years, more shares, you're up to 16,089 shares. You've gained 5,260 shares in this time frame. So now you're getting this 55 cents on 5,200 more shares. So that really increases your distribution. If you had done this and then said, okay, now I'm going to turn the drip off and I'm going to start taking it. Look at this. You're getting $7,000, $8,000 a month in distribution. And that's a nice way to do that. Sometimes people like building up their shares prior to retiring or living off of them or drawing that out. That is a full drip. And if we go over to column E, we can see a 50% drip. And I know still some people get confused on this, so I apologize for those who have seen several of my videos and understand this, but there are a lot of new people that watch videos, so I want to make sure I'm not assuming everybody understands this. This 50% drip, just imagine you get this payment twice. You get the $2,038, which is half of the distribution, and we're going to reinvest that. And you can see the new share count over here in column H. We buy $2,038 worth of shares, which is half of the distribution, and we add some more shares. But we also get this $2,038 as cash. So we're simulating, we have invested in this, we're reinvesting some of the distribution, half of it, and we're keeping half of it for income. So with this, you're getting, starting out around $2,000 a month of income while you're buying more shares. As we come down here, we'll skip down here to 2024. You can see the distributions, half of what you're getting for cash is about $2,300, gets up to about $2,600 here mid-2024. And then at the end of 2024, we start hitting the $3,000 mark. So we get into 2025, we're in the upper 2,000, 2,800, and then we get into the $3,800 range. It came down a little bit, but it's been in the high 2,000s and mid $3,000 a month range. If you were doing this, you would have received over 3.5 years, $118,804. that you've been able to spend on whatever for living expenses, etc. But you've also reinvested that same amount because this represents half of what you received and half is what's going into buying more shares. So you were able to add 2,377 more shares in this distribution scenario. Now, the third one we're going to look at is the zero drip. Here we're taking the full distribution. This first payment, you can see it's exactly the same as the full drip because the first one, you had the same number of shares. Now, as you go down column F, you're going to see that it continues to get lower than the full drip because you're not gaining any shares. You're sticking with this 10,829 shares and you're getting paid the distribution on that. And you don't see that early on as much because, the full drip, you're gaining some shares, but you haven't gained a ton. So there's small differences. You can look here in January 1st of 2023. Full drip, you got $6,728. With no drip, you got $6,232. So about $500 less because of not adding more shares. We come down here to the end. Now, again, this is you're living on this. You're taking this full distribution. So we come down here in 2025, you can see that you're getting around $5,000 to $6,000 a month. On average, you're getting about $6,000, give or take, a month through 2025. You have increased your distribution because the distribution rate has gone up. You haven't gained any more shares. Let's look at another scenario here. December 1st, 2025, with full drip, you received $8,816. With no drip, you only received $5,990. So you're about $3,000, just shy of $3,000 less because you have 5,260 shares less with no drip. But over that 3.5 years, you've received $214,000, or on average, $4,982 per month for 3.5 years. And again, that has been going up. So you're getting a pay raise, keeping up with inflation and seeing that. Now let's jump over here to the share balance and what your market value is. Again, we started at 525. With all of these, you can see that they all went down a little bit because of the share price dropping. We never got too low, even with the no drip. And we got down to 440,000. So you lost about 80,000 there. But the nice thing, and this is great, if you were living on this and that sequence of returns, beginning of retirement, you're watching that drop and maybe you're having a little panic, but you're still receiving a nice healthy income, yet it recovered. And so by August of 2023, you're above your original balance. So you recovered your original value. And that's nice in retirement to know that it can recover even if it drops because you're still receiving income. And in this, with these covered calls, you don't have to sell shares. So when this price is down to 440,000, I don't have to go and sell shares to get income. I'm able to just keep living off these distributions. And then we'll come down here to the end of these three columns. With full drip, you gained $410,000. Again, you've added in all those distributions and bought more shares. And so your market value in 3.5 years has almost doubled, up 78% in 3.5 years. It's a very healthy growth overall total return. With 50% drip, you increased your share value to $243,000. So now your portfolio is up $243,000, but again, you've already received $118,000 of income. And with zero drip, even though you had maybe a little scary first year, you've gained $105,000 or 20% increase in your market value. And you've been receiving $5,000 a month on average for 3.5 years. For 3.5 years, pretend you were retired, you had put all your funds in this is $525,000. I'm taking this $5,000 a month. That's averaging $60,000 a year of income. And I've increased my portfolio by $100,000. A very healthy return, very safe feeling. Again, this has been a strong market, even though the beginning was a little bit low. That gave us a chance to accumulate some more shares in these full drip and half drip scenarios. But even in the no drip, we were able to increase our share value. So looking over here, we have our full total return. We always want to look at total return with these covered calls, these higher yielding pay, because you can look at the income, and that's always good. You want to see how much income you're making, but If you don't, especially if you don't have share increase, if share price isn't increasing, you have to see what is the total return. With these, you have really strong total returns all over. So with full drip, it's obviously whatever the market value of your portfolio is, because you've just reinvested all the distributions. So you're up 78.27% over that 3.5 years. About 22%, give or take, average. Very healthy return. 50% drip, you're up 69% because you have the $118,804 that you received in distributions and your $243,000 of growth. So combine those, that gives you your total return. And with no drip, you take your full income, the $214,000, and the increase of your share value, that gives you a $319,000 increase because that is your total return, how much income you took and the growth of your portfolio. So it's just under 61% return, total return. Very healthy on all three of these scenarios. And so that brings us to our hypothetical, what if we set a distribution of we want to drip 70% and keep 30%, or whatever the case might be. And for those that like these sheets, that's where you can put in your starting date and you can put in the amount that you invest, because some people will say, well, I don't have that much, or I have more, whatever the case might be. You can adjust this in the yellow here. And then also here, you can adjust in column N, the percent that you're going to drip, which is in this scenario, we're setting it at 70%, but maybe we wanted to do 40%. Change that. It changes everything for you. And this shows you how much of the distribution, which is 40%, you're going to buy more shares. And here's your share total now over here. And then it updates your value of your portfolio. And then you can see how much you're keeping. And so in this scenario, what we do this for is because in some of these funds, if you don't drip, your portfolio balance is going to continue to decline. So you have to drip some to maintain. Maybe you just want to maintain this balance or let it increase slightly. So you have to set this to adjust about how much do I have to drip to maintain my balance over the period of time that I'm looking at. Or in this scenario where all three, even if you don't drip anything, your portfolio is growing, maybe you say, I don't need $4,000 a month. I only need, say, what we have set here, $2,500 a month to start with on average. So I want to set this, and the rest I'm going to drip, and that'll just give me more growth, and no sense in taking it out if I don't need it. If I need it down the road, I can increase that. In this scenario, we have 40% that we're reinvesting in this column N and 60% column O that we're keeping. So we come down here in this scenario, you can see that you reinvested $93,000. So you're able to buy 1,864 more shares. And you can see that in column O, your distribution of what you're keeping is still growing because you are adding shares and you're seeing that increase in distribution per share. Now we're ending at 33, and this last one, $4,200 payment. So on average, even though we set it to start, we wanted $2,500, we averaged $3,200 over the course of 3.5 years and grew our portfolio by $213,000. So you can play around with that a little bit. Maybe you want to go to a different amount and see what it would be. And so that's why we do that. This JEPQ is a really great fund. I've owned JEPQ for quite a while. I did sell out of some of it. I'm in some of it's rebought in when it pulled back a little bit. I repurchased some, and that's just where I'm at. I always like sharing if I own a fund or not. I'm not sponsored by anybody on this. I just am showing what you guys have requested. Hey, can you show us what this fund has done? And so JEPQ is one that's got a lot of interest, and I'm sharing that with you for the back test. This is the data. Whether you like it or not, you'll have to formulate your own opinion. What are your thoughts on JEPQ? Do you own it? Do you like it? Are you thinking about it? Leave comments down below. Give the community some feedback on what you've done or what you're thinking about as we share with one another and continue to grow and help each other prosper. I appreciate you joining me, and we'll see you next time on Simply Money.